I'd like to start by welcoming everyone. So good afternoon, everybody, and welcome to today's committee training webinar. We would like to respectfully acknowledge the Boon Wurrung people of the Kulin Nation and the traditional custodians of the land throughout Australia. We recognise their continuing connection to land, waters and culture and pay our respects to their elders past, present and emerging. Our committee training webinar series is designed to equip committee members with the knowledge and skills needed to perform their duties and to support harmonious functional communities. Today's session is titled Understanding Owners Corporation Insurance, and it will take you through what you need to know about strata insurance policies and the committee's role and responsibilities when it comes to insurance. A couple of small housekeeping issues just before we get started. So your microphones and cameras are all disabled for this webinar. There is an ability to ask questions via the Q&A function at the bottom of your screen. And we do have a team available to assist with those questions while you ask them. And we'll hopefully have some time at the end of the session to answer a few of those questions live. Today, we are absolutely thrilled to be joined by our special guest, Scott Allen. Scott is the State Business Development Manager at CHU Underwriting Agencies. Scott has over a decade of experience in the strata sector, and he's an expert in all things owners corporation insurance, and is a wealth of knowledge for ourselves as OC managers. He is passionate about providing education in the industry, and that's why he's given us some time today to come and help you all learn more. So without further ado, I would like to hand you over to Scott to take us through his portion of today's presentation. Scott, all yours.
Thank you, Eliza. It was a great little welcome, and thank you to everyone on the call today for taking time out of your busy days, I'm sure, to come and learn a little bit more about owners corporation insurance. Of course, when it's running very well, it's almost not noticed. Sometimes when it's not running very well, it can be a big pain. So bear with me while I just share my screen. All right, can everyone see that one? I'm assuming we can. Yeah, I'm getting a nod from Eliza. That's perfect. So yes, welcome to the Understanding OC Insurance session for committees. So it's a nice brief one from my end. Let's see if we can get it to move along. Of course, any of the information we give when we're talking about insurance in this perspective is insurance is a financial service. So any of the information we're giving is given on as general advice. So your own individual circumstances, your own individual properties and needs aren't being taken into account by this, and so you'll need to have further discussions, of course, with your owners corporation manager, any one of the insurance experts they deal with, to sort of get an idea of what is perfect for you. So everything is just of a general nature. Our agenda for today, we'll go through the market. So where are prices going? How does the market actually work? What's affecting it? And if we look into the crystal ball, what do we expect for the future? We'll do a quick session on cladding and defects, because they are unfortunately very, very common throughout the owners corporation sector and a lot of the properties we see and a lot of the properties we insure. But it'll help highlight what the issues are there and what you can sort of do with those properties. And of course, at the end, there is a bit of a Q&A, but I believe there'll be a session from your wonderful team at the Knight after my session. So the Q&A will be at the end. Feel free to, as Eliza said, put any questions you have in the chat, and we'll try to get to as many of them as possible before the end of this session. So when we're talking about the market itself, we're talking about insurance pricing within Strata. Most of the things I'm talking about today, they can apply to you no matter who you're insured with. It is very, very general information. And a lot of us, of course, we're all playing in the same space, so we all have the same stresses. Basically, the insurance market operates on a cycle. These cycles are years long, and they can be basically divided between two sections. There's the hard market, where there's been a lot of claims, there's been a lot of damage, there's been a lot of loss. That causes competition and the capacity for insurers to write more policies and write more competitive premiums to steadily decrease because of the sheer amount of cost involved. You'll see insurers in those hard market periods either stop insuring certain risks because they are too risky and they kind of get priced out of the market. And you'll generally see premiums increase to make up for the claims that have been occurring over the previous time period. And then there's the soft market, which is of course the direct opposite, where because of the increasing premiums, the gap between premiums and claims becomes much more stable. So you start seeing competition increase, you start seeing it being a sector that lots of insurers want to play in, and you see premiums start to stabilize. And in a lot of cases, in the previous cycles I've seen, in some cases you even see them decrease. And of course there are transitional periods that can be years long in between the two as they go from soft market to hard market. So that brings us into the golden question: where are we now? We're definitely in a hard market. We're in the start of a hard market, actually. The previous soft market period lasted for quite a while. We saw premiums up to about 2017 decrease up to about 30% across the strata sector universally. And premiums were starting to increase and stabilize slowly. And then 2019, economic uncertainty and a bunch of different claims occurred. So to explain how that all sort of works, I've got a bunch of pictures here of ones that since about 2020 we've seen happen across the nation. And of course, when we're looking at pricing for strata, no matter who the strata insurer is, that pricing is definitely universal across the nation. There's going to be differences depending on where you live, and insurers are getting better and better over time of making the premium very specific to your property, which is a good thing. If your property is running well, it's in a safe place, it hasn't had many claims, you're going to see better premiums than you would if you were somewhere that was very claim prone, or maybe there were some maintenance issues and things like that. So we've got some pictures here. Top left, of course, is the most recent one, Lismore floods. That's been absolutely devastating, and those floods were across the entire sort of eastern seaboard, the northern side of the eastern seaboard, New South Wales, Queensland, and it's caused a significant amount of damage. On the right-hand side, a bit more close to home, we saw the rainstorms in the back end of 2021. They caused quite a lot of damage, roofs off, buildings flooded. And just that rainfall, observed rainfall map, that's over, I believe, only a couple of hours. You can see the hours going by up the top, goes from about 9 to 12 p.m. and it caused an incredible deluge. Bottom left, you can see the earthquake we had in Victoria. Of course, it was pretty localized, and it didn't cause too many large-scale, obvious damage events like you can see with the Betty's Burger up in Paran, but it did cause lots of structural damage over quite a wide area. So it caused cracking in many buildings, it's caused shifting of foundations, things like that, and lots of them are structural and can cost quite a lot of money. It also came at the worst time it could come at. Being Victorians, we all know what lockdown was like. It was very, very fun. And one of the big parts of lockdown is that the government made it so that insurers could not repair buildings unless the works were of an emergency nature. So if you had no roof, your entire apartment was flooded, those type of things would get repaired. However, when it came to things like painting, plastering, repairing eaves, putting up fences, things like that, the government said, no, you can't do that because of the lockdown. Those are works you can't do. We were finally allowed to start doing those works. We had a backlog of about 18 months worth. I'm talking from CHU's perspective here. Practically, I think about 2 weeks before that earthquake happened. So you ended up with every tradesperson that we could possibly muster, getting them out there to finally get these works done for these owners and owners corporations that have been waiting months to get the work done. And then suddenly there's an earthquake and they're all booked up, and we have to find capacity and start triaging, and it's kind of snowballed from there. And of course, there's been other events all across the nation. We had the hailstorm you can see there in 2020 in the ACT. We've had a bushfire just recently in WA. So the events keep on rolling and they all contribute to the losses we see. So what does this all mean? We've seen severe claims, ongoing claims. We've seen low premium growth simply because it was slowly coming out of the soft market, and that's not caught up with how much we're seeing the cost or the inflation of claims increase. At last count, and I think the last real big study we do, because we do them about once a year, we saw was practically this time last year. And since 2017, we'd seen the average cost of a claim go up about 300%. And that's combined with a poor economic outlook as well. Of course, insurers are a financial service. A big part of what we do, or what our capital providers do, because of course we provide it onto a capital provider, the premiums you pay us, is invest that money to make sure there's a pool to draw premium from later. That also goes into the reinsurance costs. That has been exceptionally low performing, and when it comes to the economy, it's also the materials pricing that's been a real pain as well. So you would have seen that in other places, things like the steel people use to make canned vegetables or canned goods of any description has been going up, causing supermarket prices just to increase. You may be doing some work at your properties or homes and you've seen the cost of materials, be it wood or metal or glass, has increased significantly, and we've seen that too. The problem with that is it dramatically increases the cost of claims and continues that increase, that really steep increase in the cost of claims, and it's driving it further and further and further with the energy crisis we've got now. Naturally, if it costs more to buy fuel, it costs more to put things on a boat and bring them across here so we can use them to repair, build and maintain the buildings that you live in. And reinsurance costs are another big part of it. Reinsurance, in a nutshell, is insurance for insurers, so that we don't do a HIH, ended up going absolutely poof, and disappearing into smoke when there are too much claims over widespread events. The Southern Hemisphere historically was seen by these reinsurers who look at markets like the Southern Hemisphere, the Northern Hemisphere, that's how broad they look at it. They saw Australia, or the Southern Hemisphere in general, as being very benign. It was quite a safe place to provide reinsurance. And as you can see from the slide earlier with those claims, that isn't so much the case anymore. We're getting constant ongoing weather events and they're chaining together. So reinsurance costs have been increasing, and of course that ends up flowing on to the end consumer as well. So all of this combined just means rate increase ahead, and an increase in either your premiums going up or insurers being more picky about what they will insure and your options shrinking, unfortunately. And if we look beyond the premium, part of the reason I put this in here is those material costs are really, really dramatic. And that means a bunch of things. It definitely means increased claims costs, as we've already talked about, but it also means that the cost to rebuild your building is going to increase dramatically too. Same with any projects you do that are construction focused. So if you've got something like a plan to, you've all been contributing to a wonderful fund where you're going to replace the roof or get the facade painted or something like that, the cost to do that is going to increase significantly because of these material shortages and material costs. The cost of reinstatement, the real driver there is your valuation is actually going to increase much more significantly than it's increased in the past, simply because it's going to cost more in materials to rebuild your building to the level it is now. So make sure, of course, you're thinking about this and keeping this in the front of mind when it comes up to budget time for things like valuations or doing large scale maintenance works. Your wonderful OC managers will be able to help guide you through that, but it's worth mentioning so it isn't a sudden shock, because we've seen some of the professional valuers in the state are really having to go through to lengths to explain the increases to some of the owners' corporations and prepare them for the jump in costs. And of course, when you are looking beyond the premium, universally, I'm not putting the CHU hat on with any of these sections. You also have to make sure that the premium isn't the only thing you focus on. It is definitely a cliche to say it, but as with anything, you get what you pay for. And so things like service, claims interpretation, what do they think of grey cases? How are they going to deal with something that's on the line? Continuance of cover, if you are a slightly more risky building, if you have defects, if you have cladding, are they going to continue to cover you, or are you suddenly out of their risk appetite and they decide not to? Or even if you have a couple of claims, they decide that that's not worth having you still have a policy with them. What's their appetite? Can they do the good, the bad, and the ugly? They're all factors to consider when you are choosing what owners corporation insurance you should go with. Yet again, your OC manager has a wealth of experience in this, can definitely help you make your way through the minefield that is the different types of cover that are around. And of course, premium's the focus. If I get my car insurance or my home insurance in the mail, the first thing I do is open up that envelope and I look at the premium. Everyone does. But just make sure you're also taking the time just to make sure that the policies you're considering are right for you. And that could be CHU, that could be SUU, that could be someone else altogether. But as long as that policy is right for you and your property, it's making sure that you aren't losing out on anything, not losing out on thousands of dollars worth of coverage just to save $100 per year. That's always something worth considering. Because there are pitfalls when it comes to not having informed decision making in place when looking at those policies. So let's move on to cladding and defects. I would like to say that's a lighter topic, but it's still pretty doom and gloom, unfortunately, and that's the case with many things insurance. Cladding is very, very widespread. Cladding, the word cladding is actually interesting. Cladding can be almost anything on the outside of the building. You might have fiber cement style fake weatherboards. That's a type of cladding. But most of the time when we say cladding, we mean dangerous cladding. And they come in two types. One is the really well-known one that we've seen on the news and things like Grenfell Tower, and that's ACP, so aluminium composite paneling. It's basically two pieces of aluminium with a sandwich of something in the middle. Often that something was a plastic of some description. It was a polystyrene, a polyethylene. Nowadays, most of the products on the market are mixed with a mineral within it, so something inert, but there's still some mixture of plastic within there. Those with more plastic are more flammable, those with less plastic are less flammable, but they're all flammable to some extent compared to something built with concrete or brick. And then there's the other type that you see far more commonly, but it just doesn't get the media attention of its famous cousin, and that's EPS, so expanded polystyrene sheeting. In the picture you can see in front of you, that's expanded polystyrene sheeting. Above that doorway, you can see a perfect example of what it actually looks like. It is a polystyrene sheet, and usually they just render over the top of it and then paint that render. It burns like polystyrene does. That fire you can see there is one of CHU's properties. It is a two-story townhouse. Bottom and top are EPS. The entire walls at the rear, and I believe the front are even the same. That fire was caused by an exposed wire from the air conditioner you can see at the bottom of the picture. Had rubbed against a batten inside the wall. It had eventually become exposed. It had sparked into the... Ooh. Hopefully I'm still here. Yeah. I've just got a flash up on the screen that said my internet connection is unstable, and I got worried for a second there. So yeah, it basically sparked and it ignited that entire fire. That fire only lasted for about 5 minutes until the neighbor actually came out and put it out with a fire extinguisher. Thank you for that neighbor. But the problem with many of these products is they self-fuel. So plastic, when it burns, it turns to liquid, but that liquid is still flammable. So you end up with fire that travels both down, up, and left and right on a building, and it spreads faster than anything else will when it comes to fire. So naturally, it's a really high risk, and we need to treat it as such. Anytime you're looking to get your property with cladding, or dangerous cladding, I should say, insured, we need to know two key things. We may ask more information depending on insurer to insurer, but generally it's two key things. What is the type of cladding you have? Both, we would like to know if it's EPS or ACP, and we would like to know what the product name is. Once your insurer has the product name, we can narrow down exactly what it's made out of and then treat it very specifically. We know exactly what it is, so we don't have to guess about anything, and we know exactly what the risk of that product actually is. And how much is it? So of the outside of your building, what percentage is the cladding? Is it 20%? It's just the top story. Is it 5%? It's just some fairings on the outside of a nice little low rise or something like that. Those two keys will allow us to write your policy properly. However, because we're going into this hard risk or hard market time, one of the things that, of course, a lot of insurers are going to focus on to limit their risk and thus limit the impact of the hard market is things like cladding and defect. So your options for insurance are going to be probably lesser than others. There are plenty of providers that can still provide you cover, so it's not all doom and gloom, but we just need to know more information. One thing insurers don't like to do, because we're, of course, very risk adverse, we just don't like to guess. So the more information we can have, the better. Here's a great example of those sandwiches for you, and this is the whole reason why we ask. So of those three there, those are all different types of cladding. The one on the far left, according to the CSIRO and various fire safety companies, has about the same energy index. So to put simply, how much fuel does it provide a fire, as dousing the outside of your property with petrol. So it and petrol are on the same level of flammability. One in the middle's a fair bit better, but it is still, of course, flammable, and so is one on the right, but it is far, far better. Only 7% of the sandwich in between is actually plastic on that side. However, it will still burn. It is still more risky than brick or concrete, so it will increase your premium, but there's a drastic difference between the left and the right in this picture in terms of premium. You can see that they're different colors, but that's only because they're different products. And it's quite likely that you can find 7% ones that are black and 100% ones that are white or grey. The colour just really means nothing. So how else, if you were looking at the outside of those panels, would you actually know how risky those products were? And that's why we have to ask all this information. 20 years ago, things were built by weatherboard or brick or concrete, and I could stand in front of a building, or you could stand in front of a building. If you wanted to know what it was made out of, you would just look at it and go, well, yeah, that's brick. If you have these panels up in front, they might be green, blue, they might have some big image on it or something, but you would never know what was in between without doing some investigation. So that's the reason why the insurers ask so many questions around them. Defects are another one. I've put a very impactful picture here, but defects tend to run the gambit between being really, really minor to the point where your insurer probably doesn't care too much. The exit sign is slightly of the wrong orientation, can actually be a defect, but there are lots and lots of major defects, and the ones that really concern insurers are any that affect the essential safety of the building. So exit, fire, and those that let water in are the big ones. Here's a great example. You may have heard of, say, the Opal Tower that was defective from construction and it had cracks all through it. It's very dramatic. It ended up on the news. This one ended up on the news, but it was much, much more quiet, and it's really, really recent. So it's 2020. They built another lovely high-rise tower in Sydney, and the person constructing, or the party constructing the fire exit stairs, just decided 8 stories above the ground to stop constructing them, and they released it, and the people moved in. Someone happened to be in that stairwell, and they saw this. So the left photo is the bottom of the stairwell where the stairs end, and then the right picture is looking from the ground floor up at where those stairs end. As you can see, this was in the process of repairing it, hence the pylons you can see in or the little mounts you can see in the left picture. Before this, there was nothing there. You could run down those stairs, go around that corner, and then be met with an 8-story drop, which is never fun for anyone. So defects are becoming much, much more common. They aren't the end of the world. Most insurers will, of course, insure your property depending on what the defects are. Some of them have bigger appetites than others, but what we just want to know is what the defects are. No defect is ever going to be insured by an insurer, simply because, of course, they are the responsibility of the builders, and the builders need to be taken into account for doing the work that they do, whether they do the wrong paint color, whether they don't paint properly, whether they forget to install a light switch, or if they do something like this. All of them are part of their jobs, and they need to be taken to task for it. It's not always easy, but that's something for them to do, and it shouldn't impact you or your insurance. So that's why there is a line between the two. But we do need to know, because many of these can have flow-on effects. And excuse the pun there, they can really have flow-on effects, especially when they let in water. If they let in water, it can be catastrophic for the building. So knowing what they are and trying to fix them as quick as possible is the key to any defect. And that's it from my side of things. We're not doing questions now. I believe we're doing them later, but I just have a nice little placeholder slide for it there. Hopefully that gave you a bit more information on where the pricing is heading and defects, and the Knight team will take you through the rest.
Beautiful. Thank you so much, Scott. That was a fantastic and informative presentation. So we appreciate your time and your presentation. So I'm going to do a quick little run through of a presentation on behalf of the Knight. And this is, I guess, a bit more legislative and a bit more about what the Act is saying and about your owners' corporations. So hopefully equally as informative. So what does the Owners Corporation Act say about insurance? It tells us that for a multi-level development, an owners corporation must take out the following insurances. They must have reinstatement and replacement insurance for all buildings on each lot, and they must have public liability insurance. So I guess what is public liability insurance, or what does the Act say about the public liability insurance? So an owner's corporation must have public liability insurance for any liability of the owner's corporation to pay compensation in respect of anybody in bodily injury or death or illness of a person. Legislation's always fun to read through. Any damage to or loss of property which is sustained as a result of an occurrence or happening in connection with the common property. Public liability covers the legal liability of the owner's corporation. Just for example, so if a resident trips on a trip hazard on the common property, they may be able to sue the owner's corporation for their medical expenses. The owner's corporation needs to be found negligent in order for the liability section of the policy to be triggered. And just a little note at the end there that the owner's corporation liability insurance only covers claims relating to the common property. So as owners, you all need to ensure that you have your own liability insurance to cover your private lot. So what about other types of insurance? What does the Act say there? So owners' corporations can take out a number of other insurance types, and these include things such as office bearers' legal liability, fidelity guarantee, voluntary workers, and catastrophe insurance. Most of the above come as standard within your policies that you would currently have, but you can opt for higher limits, and that's certainly discussions you can have with your OC manager, particularly when your renewal rolls around. So what is covered under the owner's corporation insurance? The owner's corporation insurance does not only cover common property, but it covers the structure of the building. So a bit of a common analogy here to help you out, and that is that if you take an apartment and you shake it, the items that do not move are covered. So this means that at times, particularly as a committee, you may not be aware, but then you may see down the track that owners are putting claims that appear to be private in nature. So for things such as air conditioners or fixed cabinets. And so for these private claims, they are still covered under the owner's corporation policy, but the excess is then payable by the owner who's making that claim. Items that are not generally covered, so your contents, your TVs, your furniture, things like that. Important ones to remember are carpets and curtains. So carpets is generally a big one that people often think is covered, but is not. So again, there's a little note about public liability within your individual lots, and also ensuring that you are adequately covered for those contents. And also, if you're a landlord, to make sure that you're adequately covered as far as your rental property is concerned. So certainly with your private insurance, there are plenty of people who can help you out. We will often provide you with a copy of the building policy so that when you're looking for your contents or landlords, you can see what's already covered, and anyone you go to can help out with what you need to cover yourself for privately. So there were recently changes to the Act as of December last year, and what that has allowed for is recovery of excess or of an increased premium. So the Act now states that an OC can levy a lot owner for excess or for an increased premium attributable to an insurance claim if the claim is caused by a culpable or willful act or the gross negligence of a lot owner's lessee, or a guest of the lot owner or a guest of the lessee. Excesses can also be recovered when a claim relates solely to the lot owner's lot, which is what we mentioned before. Damage to the common property that is caused by a lot owner or by a lot owner's lessee can be recovered where the damage is not covered by insurance, or the cost of the damage or the cost of repair to the damage is less than the excess would have been payable on an insurance claim. So noting that these amounts can only be recovered from a lot owner. So if you are a landlord and you have tenancies in there, you would then need to recover that amount directly from your tenant. So a bit more on the changes to the Act. Valuations, which Scott touched on the importance of earlier. With the new changes, owners' corporations over 2 lots now must get a valuation every 5 years. Previously, it wasn't a requirement, now it is. You can opt to get them more frequently, and a bit of a rule of thumb we use within the industry is we recommend every 3 to 5 years. Valuations do not determine the market value. This is a really important one to remember. So they determine the cost to replace, repair, or rebuild the common property in the event of a total loss. So this can also include expenses reasonably incurred, such as removal of debris, remuneration of persons whose services are required, and a big one is often traffic management. So depending on the location of your property, that is a cost that's often allowed for as well. Disclosure. So disclosure to the insurer, this is where Scott was talking about the importance of giving that factual information so that we can ensure coverage is correct and so that we don't end up not getting claims through if we haven't fully disclosed information. So under the Insurance Contracts Act 1984, before an insurance contract is entered into, the Owners Corporation must disclose anything that may affect the insurer's decision to insure the property. And this can include items such as occupational health and safety risks, any building orders or building notices that might have been lodged, any defects, and anything that may lead to potential legal action against the OC. And as Scott mentioned in his slides, the cladding is a big one. So where we may have been inspected and received a notice, or where some OCs may have opted to have reporting done on the products on their building, really important that as soon as we've got those and they've been reviewed, that they are provided to the insurer or the insurance broker so they can ensure that cover remains in place. So some common issues, liability claims. Any potential liability event, such as a person injuring themselves at a property or a person who is threatening any legal action against the Owners Corporation, should be advised to the broker or the insurer immediately. The OC should never admit liability, as this will void your policy. We are really relying on our insurers and our brokers to give us advice when this happens. So as soon as we receive a report, we go straight to them. This is what's happened. Tell us where we go next, which is why we are so thankful for their support. So why should we pay when we're not responsible for the claim? This is a big question that often gets asked. In some instances, the insurers may be able to recover the cost of a claim if a third party is responsible. Examples of this include if a delivery driver or any person entering the property happens to cause damage, whether that be hitting a garage door, running into a fence or a wall. If we have CCTV, witness statements, and we can get the information of that third party, we can then pass them on to the insurer and they can initiate processes in order to try and track down and recover that money. So recovery can take some time. It is a bit of a lengthy process a lot of the time, and it is not always successful. It is not guaranteed that the funds will be recovered before the insurance policy is renewed. So it's always important to keep that in mind, that it may still impact your next premium. How to make a claim. So we have a dedicated insurance team here, and the email address is there for you, insurance@theknight.com.au, and they should be contacted if you need to make a claim on the policy. If the issue relates to your private property, you will be provided with a claim form and asked to make a claim, and you will be required to pay the excess amount. If you are claiming for resultant damage from a leak from the lot above, you will still be required to pay the excess initially. Sorry, missed one there. Just a note that we can't tell you if something is or isn't claimable. We will always say you are more than welcome to make a claim, and it's at the discretion of the insurer whether or not that claim will be accepted at the end of the day. An Owners Corporation manager cannot on-charge the excess to a lot above if you've had a leak come in and if that's affected your property. You will initially need to pay that, and then you can then try and recover that from the lot above. They're private matters. So lot above's private, your lot's private, and that's where it becomes private responsibility. If the matter relates to criminal damage, it's extraordinarily important that police reports are made. These will all be included with any claims that are lodged and will help with any follow-up for the insurer. Photos are also extraordinarily helpful, and if you deal with your OC manager often, you will often hear, could you please send us some photos? Just really helpful. We're not on site, so we can't see it. The insurers are not on site. It just gives us an initial understanding of who we might need to send out in order to inspect it further. And just a note there, as you are committee members, the Owners Corporation cannot stop an owner from making a claim on the insurance policy. Every owner is a member of that policy, and as such, they are entitled to make a claim. So hopefully that provided you a bit of additional information and understanding of Owners Corporation Insurance. And we've now got some time if there was any questions. So I'll just convert.
I've got two.
Oh, you've got some questions?
I've got two I can see in the chat. I know one that Tom has already answered, and there's another one that's sitting there. One, of course, that's worthwhile mentioning. When it comes to carpets, of course, we mentioned that the Act excludes them. It's actually a throwback from the ancient times of insurance, where when insurance has been around for a very long time, and you used to actually roll your carpet up and put it in the back of the wagon or car and take it to your next property and then put it down. So that's the reason it's not insured. But the question was, what if it's in common areas? Of course, if that carpet is in a common area, hallway, stairway, foyer, something like that, it can be covered. You just need to make sure you have common contents, because of course it is still a contents item, but it's owned by the OC, and the Owners Corporation's policy is the Owners Corporation's policy, so they can insure contents under it. And the other question was, well, it's a very good one, it's the open one at the moment, is it possible or easy to determine an increase in premium or cost relating from a specific claim? Yes, that's a very interesting question. So there isn't a, if you have this claim and it costs X amount, it's going to end up causing this much increase to your policy. Basically, the way insurance works when it comes to increases, it's a matrix. So a good rule to go by is there's something called the loss ratio. It's actually very simple. Every single insurer from car to home to strata uses it, and it's how much have you paid over a certain time period in base premium, so the premium that goes to the insurer, versus how much have you paid in claims. Once that starts going over a certain level, and it's usually around 40-50%, it starts seeing the premium go up. Of course, this is tied into other things, like have you had historical discounts and the policy is actually underpriced, or the opposite. Have you been with us for a really, really long time and your premium is really adequate? It's the right price for the risk, and that may soften it. So they all work in concert with each other. So it's almost, I'm only using two examples there. There's tons of other things, flood rating. We use risk mapping. So, an insurer nowadays can tell where windstorms are going to happen and predict them with a fair bit of accuracy to know what that risk is, and that changes over time. So it all interacts with each other. So it's impossible to give an exact figure. But if you start seeing, the loss ratio is something definitely to focus on. If you start seeing lots of claims and it's starting to be more than your base premium, so before taxes and charges, over 3 years, if you start seeing that head over 40%, start expecting there to be an increase. However, of course, I think that was asked in relation to the new section of the Act that allows you to on charge the increased premium because of someone's negligence. In that case, we would actually do some special calculations in the background, which would take a fair amount to do. Most insurers' systems aren't geared up for that, because we treat, of course, Owners Corporations as one holistic thing and don't tend to focus on one claim caused by one owner, and we'd be able to figure out a figure for you to give it to the lot owner. Those cases are going to be very, very rare, though. Actually proving negligence for that claim is not an easy thing. Negligence naturally means that it needs to be proven legally, and you're always assumed to be innocent beforehand. So they're going to be rare cases, but we will be able to help you out there. I've got another one here, which is, does every claim made increase your premium? No. Of course, as I said, it's kind of works on that loss ratio, and a certain amount of claims are expected to happen. If we start seeing a pattern, like multiple burst pipes, multiple car impacts, multiple broken glass, we'll start questioning that, and we may do something like apply an excess if it's constant. However, a small amount of claims is expected with any policy. That's why that loss ratio exists. Insurance is there for you to make claims on. However, when it starts becoming more than, of course, that sort of level, the amount you're paying per year, then, of course, the price is obviously wrong. So it does need to increase. Feel free to jump in over the top of me if you like, Eliza, at any point, but I'll keep
no, that's
looking
okay.
to the chat to see what I can answer.
There's lots of questions for you, so...
Insurance is something that everyone likes to know more about, and it is very, very complex, unfortunately. No, I can see a question in there that's asking if there is any way to stop owners making claims. As Eliza mentioned, no, there is not. They are all part of the policy. And so because you are part of that policy, you're entitled to make claims, and there's no way that anyone can stop them from doing so. You can, of course, try to have internal discussions and talk about those type of things if you like, but you can't put a brick wall up in front of them to stop them making that claim. It would be unfair to them as a member of the OC and a party of the policy. What else have we got? Are we able to recover costs from a person who caused the claim, accident or incident, albeit after the next premium? How is that recovered factored into the new premium increase? Yeah, great question, actually. So whenever we do recover something, Eliza's spot on. It can take a long time to occur, simply because there's a lot of legislation around debt collecting, because it is a debt. You know, they owe a debt to the owners corporation as a responsible party, and debt collectors are really highly regulated. And there's a lot of financial hardship stuff in there. And some people legitimately might have financial hardship. Some people want to try to avoid paying as much as they can. And so sometimes we end up with a $10,000 claim where the most we can actually legitimately get out of the recovery is $20 per fortnight, which can take a really, really, really long time to come across. Some of them are fine. The best ones are companies. So if, say, the postie hits your letterbox, for example, they work for a company that has a large insurance policy, and it's just insurers talking to insurers, and the recovery happens in a matter of months, but it's not always that way. The way the recovery works is we'll do it as long as it takes, or as long as it's financially viable to do so, because of course there's a cost to get these third-party debt recovery companies to recover the debt. We'll go to the nth degree to try and get it done, but if it ends up costing more than the claim is worth, then it's not worth doing. The very first thing we'll do, no matter how much sort of per week, per month, per fortnight we're getting, the very first thing we'll do is, once we've got the excess, so say your excess is $500 and we get the first $500 recovered, we will then pay that back to you. So whoever paid the excess then gets reimbursed. So the impact is minimized on you as quickly as possible. We will then continue to recover it. And as we recover it, the amount that claim is for, say that claim is $10,000, will decrease by every payment. So on the 1st of April, we get $20. That claim amount paid will go down by $20. Thus, its impact on your policy will decrease by that much as well. And the loss ratio will update. And so you might have, say, you have a claim halfway through your policy. We start recovering. We've only recovered half of it. It will have half the impact by the time of renewal that it would have had if the full claim was there. So we do definitely factor that into it as well.
Beautiful. There's a good one there, Scott. Does insurance cover internal damage as a result of a building defect where the damage has occurred outside the building warranty period?
Oh, that is a good question. What? There is one case where it can, and that's when it is a flow-on secondary effect, and that almost always happens because of water. So if you have water come in and the defect is, say, really poorly constructed gutters, let's go with that, say. It lets some water in and that water damages the internal walls of Unit 4. We can definitely look to make that a claim and cover that as a claim. And it's happened many times in the past, with one key, I guess, requirement is the only word I can think of at the moment, and that's that the cause is fixed. So in there comes the problem. We aren't going to repair something if it's just going to happen again tomorrow. That's not good for you, not good for us. It's just going to constantly cause the price to increase. So we will ask you, have you fixed the cause? If you fix the cause, so you fix the gutter, put a new downpipe in or something like that, or whatever is required to make sure it doesn't happen again, we'll then happily come in and quote up and cover and repair the resultant damage. So yes, it definitely can be. It looks like there are two more there. When an individual owner makes a claim, Tom's typing an answer to this, but I'm more than happy to give it a go. Is the OC informed that a claim has been made since this affects future premiums? So if a claim is made directly to the insurer, we just take that at face value. We, of course, don't really communicate directly with you as an owner's corporation in any form apart from claims. Because of course you've got your OC manager and the broker that the OC manager uses, maintaining a lot of that relationship with them. What we do with any claim is we do communicate that claim or what's going on with that claim. We're sending out a carpenter, we're sending out a plumber. We'll send that to the owner's corporation manager and the broker, and usually that flows on, and that's how you're informed. One thing I always suggest doing internally as a committee is making sure you go through to your owner's corporation manager to lodge claims, because usually that's the fastest way to get things done, and it keeps everyone informed of the process. The owner's corporation manager might have some great tradespeople that they know that they can get out there at the drop of a hat. The faster things get repaired, the better. And so number two, there's a second part of Andrew's question. It's how long does CHU take to decide on the validity of a claim? And does CHU immediately inform the OC of the results of this? And how is this done? That's a great question. So it all depends on the individual claim. If it's a broken window, please just repair it. Don't even ask us whether it's covered, because if it's, if you look at it and you know that someone threw a rock through my window, that is covered. If you accidentally, were playing basketball in the house with your 4-year-old son and you put the basketball through the window, it's an accident, it's covered. So for those type of things, it's instant. The more complex the claim gets, the longer it takes for us to look into it, find out what happened, what are the situations around it, and tell you when it's covered. We'll always try to do it as fast as possible. But of course, there's going to be limitations depending on what it is. If we need engineers out there or something to look at it, that's going to take time, naturally. And once we know that it's covered, we'll immediately inform the broker and the OC manager, and then that will be when you, of course, are informed that it is covered, and tradespeople are coming out to repair it, and all that sort of stuff starts happening. So yeah, it looks like we've actually answered all the questions in the chat. If anyone's got any other ones, feel free to ask.
Oh, we've got another one that's come in there.
Oh, yes. This, I feel, I know this. I see this very, very often. When I was mentioning the limiting of risk, we are really currently, simply because of how catastrophic the last few years have been, are seeing lots of insurers not quoting. And Strata insurance is actually a really small part of the insurance industry. It's not very large compared to the very large, big home insurers and stuff like that. So if there is only one option, usually that's the only, it is literally the only option. Hopefully you can have a discussion with your owner's corporation manager and the broker and make sure you are getting the best product that you can get. And of course, you never want to be having one person being the only provider and feeling like you're trapped by that. Most of the time when we are the only provider, there's usually a reason for it, be that defects or it's a large commercial risk or something like that. But I know when it's CHU, we always are very considerate of those ones and making sure that, although we probably need to charge more for a property like that because there's a reason why we're the only supplier, we also do it within reason. We want to make sure that you're not suffering from having that as the only option. But it is realistic nowadays. There are a lot of insurers not providing quotes for many things. And a follow-up from Andrew, which is how long is the maximum time to inform the OC of the results of a claim, especially if it is substantial? Depends on how long it takes. I wouldn't say there's a set maximum. It depends on, there are of course response times within the Insurance Contracts Act and things like that, but that of course they are responses, not with saying whether or not it is covered. So we can say something like, we are still investigating this, we're going to send out an engineer or something like that. So there's no really set maximum, I guess, and that is very situational. It depends on the individual claim. Follow up, how long? Oh, there was a second one there, but I think we're done. Yep.
Yeah, look, and there are some very specific questions coming through, which are probably best taken offline directly with your OC manager, who can put you in touch with any brokers or insurance that need to be involved. So amazing answers there though, Scott. We are very lucky to have had your wealth of knowledge and your time today. So thank you so much for taking time out of your busy day to come and present to our committee members, and to all of our committee members who have joined or who are watching this at a later time. Thank you so much for taking the time to educate yourselves further on what's involved in your role as a committee member. Hopefully we will see you again at some more of our committee webinars and have some more fantastic guests. So thank you all for your time and have a wonderful afternoon.
My pleasure. Thank you everyone for coming.